Hello everyone, welcome to another live trades portfolio update. So, not a great month really, October. Remember that the way I calculate these returns is I'll only book profits and losses which we've actually taken. So I'm not including open trades, and that's why I'll also go through all of the open positions we currently have. Just after we have a quick look at what we've actually banked. So if you just have a look up here, this is our own portfolio. So it's ETFs and stocks. And as you can see, we are down just over 1% in the month of October. And you'll see where those losses came from just in a few moments. Now, the Barclay hedge funds long short index, which is basically an index of it's about 500 or 600 hedge funds with a long short equity mandate. Well, they had a pretty reasonable month actually in October, so they're up 1.77%. And that's put the year totals, if we just see the graph here. Um, this is the tax year. So from April, we are 18% up, and the Barclay hedge funds index is 6.6% up. So, we're still outperforming, but as I say, October was not our finest month. And now let's have a look at our open positions. And I've also left on my list some of the trades which we took as losses, and we'll see where we lost this 1% in October. So the most recent trade we placed was in AVG. Now they had a very sharp sell-off, and one of our models basically looks to essentially to buy to catch a falling knife. We have tight stop losses, we have fixed profit targets. And when it sold off like this on the 30th, our indicators suggested that the down move was overdone. Bear in mind we're clearly still in an uptrend. So we took the trade just here around about 2106. And it just kept falling and falling and falling. We have found some sort of support. A few buyers have come in down at about $20. So we'll see what happens with this one. But we're about 1/4% down on the trade. Next up, we got BT Group. Now this is, we've been in this trade since October. It's doing absolutely wonders for us. We've been moving up our stop. So we're banking a couple of percent on this trade already. Now, sugar, this is one of the reasons we took a bad loss. We actually got long here. We trailed a stop up. It looked like, at one stage we're up a couple $1,000s. But this is this is basically the nature of trend following. You're gonna sometimes you're going to get lots of false entries, but the point is you have to just keep taking the trades, and that's why you have to keep your risk to a conservative amount, because then all of these setups you can take them, and if you do get stopped out as we were here, then it's no problem at all. We just wait for another setup. It's slightly annoying with obviously ETFs. And this is why sometimes it pays to just trade in the actual futures market itself with these commodities. Same goes with currency ETFs as well, actually. You're probably better off just in the spot market more often than not, because you're not going to get gapped against. Because that's what happened here. We had our trailing stop, which was this red line, but we gapped away. Interestingly enough, if this happens to sell off another couple of dollars, then I'll definitely be taking another stab at the long side. This is a sharp sell-off. It's too sharp, and as you can see, we're oversold stochastics. We're just waiting for our ATR, our volatility indicator, to suggest that the move to the downside is too far, basically. So we're waiting to see what happens there. But as I say, if we're down in like the $60 region, then definitely we would want to be a buyer with a couple dollar stop loss. Cow, again, we're guaranteed profit barring any gaps, but this is our trading stop. We are approaching it now. At one stage we were over $2,000 up on the trade, but it has retraced. Let's just hope that our trailing stop isn't too close to the action and we can stay in the trend. Pretty much nothing to report on the Japanese equity index. Technology flat as well. Kingfisher, we've already taken half profits. We're still in the trade though. We're skirting with closing that trade at our second profit target. Lakes Entertainment, nothing to report. We took a short trade today just because we're so heavily long in the portfolio. We felt that we need a couple short positions. I'm going to be looking for one to enter tomorrow also. But the short we took today was in New Star Energy. That's stock ticker symbol NS. And again, as you can see, we're in downtrend. We've had a nice little rally. You know, some of you Ellioticians out there would see this as an ABC. Corrective pattern against the major trend. Wave 1, wave 2. So who knows? I'm not an Elliott wave guy. Sometimes just for fun, really, I try and put some counts, but I would never actually take a trade based upon counts. This is simply a statistical model I have, and we've just calculated what's 5 3/4 times our ATR. And if we move that while also being overbought, then that is statistically a significant move against the major trend. So I'll look for a position, and that's what we've done today. So we're short in at 44.64. Our stop loss is up here around about $47, and we have our profit targets 42.30ish and 41.06. Agriculture, again, we took a trend trade. We broke out here. Just basically pick the absolute high of the move, and again, this is going to happen with trend trading. Not quite stopped out, but tomorrow will be key because we really do need to turn, otherwise we're going to have taken our stop on that trade. What we got here, the TVT, of course. So we're long on this trade. It's pretty much gone up ever since we entered the trade, but we're about halfway to our profit targets. We're about 0.6% up there. We're in this timber and forestry ETF, ticker symbol wood. Again, you know, you'll see all of these commodity ETFs that we entered last week, they all sold off pretty badly actually just after we entered the trade. None of them have quite stopped us out, but we really do need to see them resume the uptrend, or we're going to be taking some considerable losses actually this week. Ted Baker, again, we got long nearly 2 weeks ago now. I'm confident of this. We've had a very bullish bar print today. We're not far away from our first profit objective. If we do get the first profit objective, I think I'll be moving my stop loss to the low of this bar, so just under this little pattern here. Transglobe Energy, that's actually one of the nicer trades we're in. Trend following, we got entered down here about 832. We're up nearly $1,500 on that trade at the moment. Trading stop loss is going to guarantee us some sort of profit on the trade. And the last open position we're in is the United States Gasoline Fund, ticker symbol UGA. We've already taken half the position off at the first profit target. We decided to run this trade. We'd never moved our stop to break even, as you'll know if you follow us on Twitter. So if I do get stopped out of this, it's not a problem. It'll just be a scratch trade. But hopefully, you know, that'll come back to the upside. If we just scroll out, you know, this is quite a nasty sell-off we've had. So it wouldn't surprise me at all if we can bounce. That's it for this this month's update. I'll be doing another one at the end of November. As always, though, keep an eye on the blog each week for updated watch lists of penny stocks which are breaking out on our weekly trend following model. And also, our weekly watch list of long and short stocks which have passed our strong and weak fundamentals screener and have also met the rules of our stock sector analysis. So that'll be about it. I shall speak to you soon. Take care.